most people are unable to critically analyze themselves. That's why they don't become rich. The game of investing is sold on the basis of a mystical quality in that one person who can see the future better than others, which is all shit.
You mentioned that the level of investing in India is abysmal.
Investing frameworks in India are very, very low end. There's no discussion on that in India at all. Zero.
What is that one thing that you understand about India because of your globalized vantage point that other people don't?
I was living in India, but I was not living in India mentally. That is where the globalization of thinking came. It did not come because I moved abroad. In 99, we got membership of the London Stock Exchange, the first Indian firm ever. And till date, I think the only one. Vast majority of the market is a pattern.
If a young 22-year-old person wants to understand that pattern,
He'll understand it when he's 62. You're not going to get rich before that. Warren Buffett made all his money after 60. In the Harshad boom, I was lucky to make money. It is simply a probabilistic game. It's not about how should I. It is, first of all, do you want to? The desire has to be there. The Indians are too self-satisfied and self-congratulatory. 100 decisions ले रहे हैं, 30-40 तो wrong होगा ही होगा ना. But Warren Buffett gets 90% wrong. Long-term investing is all well and fine, but it's not going to pay your bills. Warren Buffett has never taught us this.
you also said that you look data in relationships also.
Like we do a company analysis, exactly the same framework applied to your potential partner. Markets don't fall because the lake has filled up only to the extent of 1.2 times its capacity. Lakes burst when they reach times the capacity. I know this game better than practically anybody else around. When I say this, it has to have meaning.
I was with Kishore sir and he said me is the only mard in the world of fattus in the stock market. Hi everyone, I'm your host Shivank and we are part of the 01 Network by Zerodha. Together, we intend to bring you insights from the top thinkers in the field of entrepreneurship, technology and investing. मैंने आपके आर्टिकल जितने भी पढ़े उसमें मेरी वोकैबुलरी बहुत इम्प्रूव हो गई. नॉट ओनली वोकैबुलरी बट ऑल्सो सेंस ऑफ ह्यूमर बिकॉज आई रियली लव जेन्युइनली आई एम सेइंग लव द वे यू राइट आर्टिकल बिकॉज बहुत बोरिंग आर्टिकल मैं पढ़ता हूँ इतने सारे प्रोफेसर्स के रिसर्च पेपर. इट्स सो बोरिंग, इट्स हार्ड टू कीप योर पॉइंट. बट आप जो आर्टिकल लिखते हो आप बीच बीच में जोक्स मारते हो. It's really interesting. मतलब I complete your article.
No, because see, the way I look at it is that you have to, like in my MBA, our finance professor who was brilliant, the marketing professor was brilliant guy, and he, apart from everything else he taught us one thing, that in marketing, the crux always lies in imagining the face of your consumer. If you remember that throughout your life, you will never go wrong. Always imagine the face of your consumer. Now, when you start thinking of everything through that lens, everything changes. So when I'm writing an article, I can write it with a lot of data, with a lot of numbers, charts, graphs, bars, blah, blah, blah. But who's the consumer? There are two consumers. One is the layperson who's reading an article in the media, correct? He's least interested in all of that, okay? He has no interest in a bar graph or a histogram or this or that explaining things or numbers. He wants an oversimplified perspective, or at least simplified, if not oversimplified. Second is a professional user, okay? Which is, let's say, people like us who are more data-driven, more numbers, more this and more that. I am that. But would I want to read an article with a lot of graphs and jargons? I don't want to read it because I'm doing that for a living. When I'm reading something which is to provoke thinking, I just want to read English. I don't want to read numbers in that. Numbers are a blind spot because we are dazed with numbers all day, all night. It's at us. But simple, conversational, casual tones with conveys a deeper meaning is what will get the maximum resonance from the reader. So you have two. So I visualize my two consumers.
Very interesting. So एक बच्चा पार्टी है और एक बुद्धा है.
दोनों को अल्टीमेटली चाहिए ही वही. जो बच्चा है, he is reading a lot of it in his professional career. जैसे you're in IIT, somebody is doing CA, वो तो numbers से deal कर रहा है ना, in one form or the other. This is not reading to get a degree.
Yeah.
You see the point? This consumer of mine for that precise moment of 10 minutes or 20 is not going to win a degree out of this. It's not the goal. For that, he's got enough things in that.
Makes sense. You know, YouTube पे भी what I was talking about a lot of people, and this is normal. If you're only entertaining, there is no mental value out of it. And if you're only educating, people won't watch it. So if your content is 45-degree angle of education and entertainment, so वो आपके articles में आता है. And that's
because
why
I think about who my consumer is. What I learned 35 years ago, I never forgot that one line.
And he was a marketing professor.
Yes.
Remember who was? Where did you?
In Asian Institute of Management in Manila.
Oh, okay. Very interesting.
So I remember that. And it helps me every day. Who's your consumer?
I got to know that you also worked with Shivnadar sir, HCL. You interacted with him personally?
Yeah, of course. It was a small company then.
Can you take me through that time? How old were you back then?
21.
Do you remember your first interaction with Shivnadar sir?
Yeah, very much.
Did you learn something from him?
Yeah, 100 times what I've learned subsequently. So, at the heart, so Shiv was not a computer engineer. He was a textile engineer. He formed a computer company, but he was basically a textile engineer.
I was not aware about this.
From textiles, nothing to do with computers. So he did not, from our perspective, he basically told us, or rather taught us the art of making computer become demystified for the people. Because in 1984, computers had just started to come into the world itself. Mainframes were there. So the IBM 1401s and all of those things were there in the 70s, 60s, 70s. But the more accessible computers, like a mini computer, which the data departments of companies would have, and then it became a desktop when the IBM PC came, which came, I think, in 82 or 83, something like that. And that set off a whole wave of IBM PC compatibles. So IBM came up with which was a mainframe company, innovated to become a personal computer company. That personal computer was cloned by everybody across the world to build. So it was called IBM PC compatible. That was the term for that category of computers.
I see.
Which were running MS-DOS, Microsoft Disk Operating System, before you were born. So that was literally the foothills of the personal computing boom in the world. And I was right there when it started. All of us in the whole world was learning about computers at a first-hand level. Earlier it was mainframes, which are somewhere embedded in one giant organization. On your desktop, you never had anything, which we now believe is a de facto norm. It wasn't there. When we started to get into computers in HCL, the whole point was it has to be so demystified that anybody can understand it. So again, it was understand the face of your consumer, demystify what is a complex jargon. So Nader basically taught us how to demystify to the extent that anybody can think of owning a computer. The whole point was that it's a sales organization.
It's not a tech. Very interesting.
There was no tech in HCL.
I was with Kishore sir. You know Kishore sir, Future Group, Kishore Biani sir.
I know him very well.
Yeah. So मैंने उनको बताया कि I'm interviewing him, and he said me कि he is, and I'm quoting him verbatim, he is the only mard in the world of fattus in the stock market.
No, he's a very old friend, very good friend.
So, मतलब, he's like, yeah, he can tell you the real truth. बाकी कोई भी investor कुछ भी नहीं बोलेगा. But he comes out and he talks data, he talks fact, and वो डरते नहीं है कुछ भी बोलने से. And जब मैं आपसे बात कर रहा था, तो WhatsApp पे भी you mentioned कि the level of investing in India is abysmal.
The investing frameworks in India are very, very low end. Data is not given primacy, which it should be. The science of investing is not given primacy as it should be. It is all colloquial, very storified, very lyrical, which works from a marketing standpoint, because ultimately everybody in the business of marketing, their funds or whatever, broking, this, that. But it does not help you make money.
So what helps?
Data. Market is a method. Market is not a random event. There's nothing called randomness. I'm not saying in 100% of the time, but let's say vast majority of the market is a pattern.
If a young 22-year-old person wants to understand that pattern, how does he or she look at it?
He'll understand it when he's 62.
But we have to make money thoda sa earlier. There is no point in having $1 billion at the age of 62 rather than having
I'm
100.
61.
Huh.
I'm 61. I can still use $10 billion. Warren Buffett made all his money after 60, 99% of his wealth.
But it's...
You will become more wealthy from that age onwards, let's say from 50s.
But what will you say to the bacha party who wants to get rich?
You're not going to get rich before that. I mean, I was lucky in a lot of senses that I became rich very early in the stock market, which was back when I was 28, 29. I became, in the Harshad boom, I was lucky to make money. And I was luckier to actually sell. So the sell discipline is extremely important, no matter what. And then there is, by the way, there's no discussion on that in India at all. Zero. Zero means zero. It's like it's a taboo topic. It cannot be discussed, which I believe is critical to long-term wealth. Your self-discipline will determine how much money you will keep accumulating over time. Because again, it's about data. Self-discipline comes out of having made returns which are supernormal. By supernormal, I define it as, let's say, 3x of normalized returns of the market. If your portfolio delivering that, you have to take money off the table. Even on a stock-by-stock basis, there is enough data which I have analyzed over decades of stock market history, which tell you at which point you should sell a stock. Purely data.
And the point is 3x and the annualized.
3x is for your portfolio.
Okay.
On a stock-by-stock basis, that number is different.
So help me understand this, sir. Because अगर हम selling नहीं समझेंगे तो कुछ भी नहीं होगा. So you're saying कि अगर मेरा annualized return let's say 15% है, so as soon as I realize something which is 3x of that, I should sell. Is this the thumb rule that you're talking about?
There are two elements. One is the return element, the other is the time element. So if your return in 1 year is 3x of the index returns of your portfolio, it may not be a smart decision to sell. But over a period of let's say a longer period, say 3 to 5 years, if that is the return number, it's clear you have to sell. So there is time and there is returns. Both are important.
Do you know medical costs in India are growing up by more than 11%? That's close to nifty returns. And most Indians are just one hospital bill away from bankruptcy, because most of these treatments runs into lakhs of rupees. And that's why health insurance is a must. If you want to live a truly financially independent life, it's a gentle reminder to get yourself insured. I trust the folks at Ditto Insurance because they provide you free consultation and tailor-made advice with no pressures to buy, no mis-selling and no spamming, and will also help you with documentation and claim settlement when you require someone the most. So if you're looking for a spam-free platform to invest in insurance, schedule a call or a chat with Ditto Insurance. Link in the comments. So you have a vantage point of a global perspective because you live outside India. So
No,
India
that is not true at all.
Why?
My vantage point did not start because I moved out of India in 2010 or 11 when I shifted to Dubai. My vantage point started in 1970, or let's say even in the 60s. So my father was an engineer. India had just become independent in 1947. He was looking to do engineering. He had done a mechanical engineering degree in India. But at that point in time, India was just growing out of years of colonial rule. There's not much use for mechanical engineering back in the day. And then he figured out, I don't know how, that mining was the area to go in because India needed, because what will you make if you don't have the raw materials, the resources? So he went into mining engineering. He wanted to become a mining engineer because he said that's going to be a boom industry. Actually, in hindsight, it was a brilliant call. In 1949, he made that decision. But in India, unfortunately, there was no mining engineering. So IIT Dhanbad, which was Indian School of Mines, ISM, right, wasn't even formed then. I think it was formed in the 60s. So now you want to do mining, but there is no mining here. So then he got admission into Leeds University in UK. Because back then UK was still, it had coal mines. Okay, now it won't have it. But back in the day, mining was a big industry in the UK. And then he went in 1950 to England to study engineering. And then he worked in the coal industry there for 3 years. But the perspective I got from him, the moment I was able to get perspective, was a very globalized perspective, right from that era itself. And then by age of 7, I remember, 1970, 71, when I was, I think, 7 or 8, he got me subscriptions of certain key global magazines. So I don't know whether you heard of Popular Mechanics.
I haven't, sir. But please feel free
Go
to
and read about it. Or Popular Science. So there were 2 iconic magazines. I don't know whether they must be still around. Of course, maybe just electronic. But those were, for that era, the gold standard in understanding science in an applied basis. Every issue of Popular Science or Popular Mechanics was like gold if you're a kid. And I was 7 or 8. And he got me subscriptions. They were very expensive back in the day. Remember, this was India of 1970, not as prosperous as it used to be. I'm sure it would be costly, it would have been costing him a lot of money. But he got me that. He got me a bunch of encyclopedias, which were fantastic, but they were American and they were English. Obviously, India, there was no.
But you were living in UK.
No. I was in India.
You were in India.
Yeah, he came back in 1950s. So and then he got me subscriptions to photography magazines from the UK, car magazines from Car and Driver was a famous magazine back then. Guns and Ammo, which was a famous magazine for guns. Aircrafts Today, which was a book on, which was a magazine on aircraft. So there were sector magazines.
I see.
And then I was studying in a Jesuit school. Our priests were all Americans. And in fact, they were German Americans. So they would have gone in the Holocaust to America. Then they became missionaries, Jesuits, and they came to India. And then they started, so this is Xavier's circle. There's all Jesuits. And those American priests, American German priests, just gave us an outlook and a thinking and science and understanding of how the world was, which was way beyond what India was at that point in time. So I globalized very early. Long story short, I was living in India, but I was not living in India mentally. I was building model planes when I was, I think, 9 or 10, which actually were flying. Because in our school, there was an aero modeling club back in that time. I learned all that, which was not typical of an Indian kid to understand. Even today, it's very hard for them. Back in the early 70s, this was unheard of. But thanks to these influences of people in my life, my father studied abroad, we were educated by American priests, we got a very Western level of daily, it was like daily in your life. That is where the globalization of thinking came. It did not come because I moved abroad.
I see. So 2 things here.
Yeah.
How old is your kid?
My daughter?
Yeah.
I have one daughter.
Okay, how old is she?
She's 20.
Just like the way your father subscribed you and gave you the subscription of Popular Mechanics, what are some subscriptions that you have given to your daughter?
Oh, I have given to her a lot more than that. So that's a different discussion. But yeah, I mean, I've done that, whatever I was given, but I've gone a lot beyond that.
I want to know what are some interesting things that you read and you make your kid read, because you mentioned that your major understanding of the world came from...
No, so I'm just not into reading. I'm a lot into fitness and health, and I believe that reading everybody can do, but a very little emphasis is placed on your ability to be physically very fit, which is where I lend a lot of I've been a cricketer and athlete at a fairly decent level, played for my state and all that. So I impart a lot of that. I impart a lot of the training methods I learned, but of course I use a lot of technology now. So I use all of that. I mean, I use everything which is cutting edge.
Interesting. Tell me.
So that's what I was telling you before the interview started. The stock market for me is 5 minutes in a week. I don't spend much time. I mean, I have had meetings like this or with friends and all that, and I never pick up my phone to glance at the market. I never do.
Very interesting. What is that one thing that you understand about India because of your globalized vantage point that other people don't, sir?
I understand the goods, but I also understand the lacunae, which if you're just sitting here, maybe you don't understand it as well.
Okay.
And when you understand the weaknesses of anything, it's like, even when you're playing cricket, I've been a sports person. The way you improve your game is when you understand your weaknesses more than your strengths. It's really a critical evaluation of your weaknesses that is going to make you from good to great. Whether you're an individual, a sports person, in IIT, or, in whatever, in business, in politics, if you get your weaknesses sorted, you are winning this game hands down, because most people are unable to, first of all, critically analyze themselves. For me, India is me, right? I mean, India is not an alien country that I have to look at it neutrally. I am an Indian, born and brought up here. I might be living abroad, but that doesn't change the blood in my veins. I'm an Indian. But because I'm neutral about this analysis, I can understand the bads and the weaknesses. I don't call it bads. There's nothing called perfection. But I also understand what the lacuna are, and therefore I can adjust for that in whatever I seek to do. For example, a startup kid comes from USA and wants to start a business in India. Now, most of them crib on social media that, okay, we have this problem and that problem, and there are problems. But that is because you've not critically evaluated your mother country. You come with a starry-eyed vision, you walk into it, and then you start to cry when the game has started. Time to cry is when before the game started. Midpoint, you cannot cry. Then you are into it. That's what I can do because of a global perspective, right, as I mentioned, right from age of 7 or 8, that I can critically evaluate India as perhaps many people cannot because they are too rooted right from day one into this environment. While I also understood there is a big world out there which is doing a lot of great things, and we need to be able to do that or get to some journey from where we are. So I can be neutral about this. Most people, including people who have, let's say, lived here, went abroad, worked there, motherland jana hai wapis, let's go and do something. They just walk into it without having evaluated. I will never do that because I balance the two, the goods and the bads.
And what is you've spoken about a lot of lacunas of India, right? And I was just reading our...
Every country is lacuna. I mean, as I always say, that perfection is the enemy of the good. That's it. Nothing called, or rather the good enough. Many things we shoot for perfection. Many things have to be just good enough. India is a good enough country. It's not perfect. But don't walk into it thinking it is perfect.
What are some countries who are better than India?
Look, I don't want to get into this because it's too complicated a subject. I mean, America used to be the promised land. I don't think it was ever the promised land. I understand America very well because I've done business there for like 25, 30 years. Extensive business, local American business for the brokerage part of my business, of my life. And I was actively involved. Understand America intimately. It's not promised land. It never was. But again, people went from India to America, like plenty of IITians go there, thinking it's the promised land. It is not the promised land. It is very good. But is it perfect? No, it is not. So I don't believe in perfection. When you don't believe in perfection, although I'm a perfectionist myself, so there's a bunch of paradoxes, but be that as it may, I don't apply that as a blanket rule, okay? Generally speaking, if you're shooting and looking for that, you're going to be disappointed. So go in thinking, is it good enough or not? And I think by that yardstick, America used to be, I'm not so sure anymore. UK used to be, I'm not so sure anymore. India never was perfect, but I think it is good enough. And that's the only way I think you can deal with the goods and the bads of anything. I don't know whether you're married or not.
I'm not sure.
But you will at some point, as most Indian kids do. If you shoot for perfection in your spouse, you're not going to get it. Forget it. It's not going to happen. If you shoot for good enough, it's fine.
What is...
सब चीज तो perspective ही है ना. Everything is nazariya. What else is it?
What is good enough for you to get invested into something?
There is no one reason. There are terrible companies that you can only see, or if you can see that the needle can move from deepest red zone into amber. That is good enough.
How do you see that the deep zone and the amber
That's
zone?
it. So you look for things, you look for catalysts, you look for what can change. And it doesn't have to go to perfection. But it's a relative change from wherever it was to something moderately. That's what the whole game of investing in a certain framework is, that you have to go from very awful to only moderately awful for you to make decent money. You don't even have to wait for it to get to perfection.
Give me an example of this.
Amazon is a very good example. When I bought it in 2001 at I think $15 or so, it wasn't, forget about becoming 200 times, which it eventually did. I thought it was going to make 100%. Because looking at the numbers of whatever we were seeing, I don't think it was ever anybody's head, including Jeff Bezos's, that it would ever become the Amazon that we now know. Because it was struggling for survival. It was going to go bust. Everything was wrong about it. So when you enter that kind of trade, the only bet was, because they've turned free cash positive, can this stock remain at a near all-time low? Or can it, because once you turn free cash positive, then hopefully it's replicable across the next quarters. Is that good enough to double it? Because when a stock is beaten down, doubling is no big deal. It can double up with just the moderately good news. That was the goal. Apple, 2002, same story. I mean, Steve Jobs had a terrible time trying to fix it for six years after he came back, 96 or 97. Nothing had worked. Launched the iPhone. iPhone numbers after a quarter or two, I think, if I remember correctly, started to deliver some numbers. Stock was, I think, $2.5 billion. market cap, which was, I think, less than Infosys's market cap then. So now the bet is that, boss, with iPhone, iPod, not iPhone, iPod, can it just double from here? Because now they have a product which is moving well. Good enough. That's your catalyst. There are many such examples. Tata Motors in 2010, same company was bleeding. CV business wasn't doing great. They acquired JLR, which looked like a bad acquisition. But I looked at the JLR cars in London. I found them to be very, very good. And so what was the bet that I took? The stock is bleeding. People are negative. They bought £1 billion Albatross, as we all believed it. I also was not positive. But when I looked at the cards, I only asked my analyst that, okay, if we model for, I asked him, I remember I was in London, what is the market share that JLR has of the luxury, because they operate in the luxury segment globally. And he said some 0.3% or something like that. And I said, boss, with these models, let's say 8% market share hota hai, 1%. Let's stay with that.
Yeah.
What are the numbers? And you know the broad margins in the luxury business, luxury car business, are higher than the mass market business. Like a car of Mercedes caliber will make a very decent EBITDA versus a Maruti.
Right. Because margins are higher.
Because ultimately what you're getting, a leather seat. Now in a Mercedes, a leather seat is a different leather. Not I'm talking the leather quality. It's just that a Mercedes car के अंदर में जो भी चीज है, even though the same features are available in lower car,
there's a premium.
There's a premium overall. There's a premiumization of your thinking when you buy a Mercedes. So you say, okay, great, leather seats, or back then rain sensing wiper, which is there in every Tom, Dick and Harry car now. But that then a big deal. You pay proportionately more than what you should be paying for these features, which is why where you make a decent margin in luxury cars. So is a model for it, and found that if they actually just got to 1% market share of the luxury market, or maybe 2%, some, I forget what the number was, and the numbers on the PAT were like exponential. Instead of making £1 billion loss, they were going to swing into a £500 million profit. That's the delta you get when you have, even though it looked like a small market share increase, because the margin effect of that market share gain in a luxury, let's say in a Maruti, if you increase market share by a little bit, margin expansion is not much. But in the luxury market, it's like selling 100 high-priced bags. If you sell 120 beyond break-even, you are looking at huge profitability, because making a Hermes bag, leather and all that, everybody makes it. But the boss premium of that extra is all profit. So that was the play. And it worked out. So this is the way you get to understand that kind of investing, which is a terrible stock. Even a country, I do countries on the same basis. I bought Turkey in 2022. I'd gone there to purchase furniture for my house. But I just went there to purchase furniture. I didn't go there for an investment. But when I go to a country, I also ask people, talk to people, see the environment, talk to the taxi drivers, see the footfalls in a mall, understand more granularly kya ho raha hai, rather than just the data. I found the stock is beaten down. Country is having inflation. Currency has, tanked. Government not so good. But I found energy there. I found factories are working overnight. I found hardworking people. I saw export data was strong because the currency had fallen. So plenty of negatives, but you only need a few positive things. I spoke to people. They were optimistic about business outlook across categories. Tourism was very good because of, the weak currency. Real estate was very good. Real estate and tourism, if you, in an industry, in a country, if you find two catalysts, tourism looks strong and real estate is looking decent, it's a buy. Yeah, assuming, of course, it's at a low price, beaten down and not liked. Because both of them have huge multiplier potentials. When a tourist arrival happens, car hire, hotel stay, restaurant, shopping. Same thing with real estate, steel, wood, plywood, adhesive, paint, sofa, building material, upholstery, everything. Right? And then for employment, in both these, employment. So you're solving major problem by just two industries. Those two I saw in Turkey. Those two I saw in Greece last year when I went to Greece for a holiday.
So you're investing in Greece now?
I bought Greece right then. It's up, I think, some 40%.
But tell me, who goes to Turkey to buy furniture, boss?
You have no idea. It's the best in the world. It's the best furniture manufacturer in the world. Chinese are good, but these guys are better on quality. Little bit more expensive, maybe 20% more expensive in China. But the quality and the design caliber in Turkey is insane because they get designers from Italy.
Okay. I was reading one tweet of yours where you said that India is and always be bottom-up approach market, and it will be a stock picking market, and top-down approach never works.
No, I did not say that. It's not always. Right now, in the situation we are in, it's gone from being a excellent top-down macro trade to being a less of a top-down macro trade. I don't like it on a top-down basis. But there are any number of companies in India. We are blessed to have a very large market ecosystem. Thousands of listed companies that are enough to fill a portfolio. Difference being we have to work harder to find these companies in a relatively bad market, which is where we are. Unlike a bull market wherein tailwind is so strong, you can buy just about anything and it goes up. But look, everything is ultimately a macro trade. But if the macro stops working, in most countries, there is not enough micro plays to play through. India, even if the macro is not great, I can find enough on the micro basis. It's a different kind of market.
There's a universe of stocks, right? Is universe mein, what do you define the 4M stock and the 4M industry? How do you define that?
This is 4AM, Turkey was 4AM, Tata Motors was 4AM.
Define 4M.
4AM means you're close to sunrise.
Okay.
Not yet, sun is out. There is a probability this one might see the sun. There is equal probability it might not. So the thing about 4AM model, which is something that I thought of, because I was doing a lot of these, so I put a framework to it, is simply that it doesn't mean all 4Ms are going to work, but that's not the point at all. It's again investing people, again in India, which is one of my pet peeves, it's talked about as a sure thing. But investing like life is not a sure thing. It is ultimately simply a probabilistic game. That's all it is. The moment you start to think of markets and investing as just a bunch of probabilities, your thinking becomes a lot clearer. You have less ego invested in your own judgments because you know that by statistics, I will get 30-40% wrong. It will happen. Warren Buffett gets 90% wrong.
Really?
Yeah, exactly. He said that all his returns come from 3 or 4 stocks, 5 stocks. And that is historically, if you look at his Apple investment, that one stock altered his returns by like a huge margin. If he had not bought it, he would have trailed the S&P for 20 years.
Yeah.
Now, what is that? It's pure probability at play, right? That I take 100 bets, 4 or 5 will work out so well that will alter all the numbers. But is that certainty? Can I keep expecting that I will get only a 4 or 5, I will not get the 95? No. Okay, I can hope that from 4 or 5, I'll make the strike rate to be maybe 20, 25. So when you look at life and particularly markets like that, then you're not, I will get stuff wrong in 4 a.m. It's fine. Companies can go bankrupt. It can happen. Amazon could have gone bankrupt. Apple may not have revived. Tata Motors may not have revived. Turkey may have gone from 1920 when I bought it to maybe $5. But you put it in a framework and you look at a variety of factors, your chances of going wrong are very less because it's already unloved and hated.
What are some 4M countries according to you right now?
China.
Okay.
Greece. Poland. Chile. South Africa.
Okay.
How many do you want?
So, Abhi, if
there are enough 4 PM companies, countries also, by the way.
What are 4 PM countries?
US, India.
Okay. India and US are 4 PM countries and there are some 4 AM countries. As a young person, how should I develop an understanding of China, of, South Africa?
It'll take you 20 years. Maybe less because now you have a lot of data sources available. But see, it's not about how should I. It is, first of all, do you want to?
Yes, if somebody wants to. This question is for people who want to.
That's the key, that the desire has to be there. Most people in India, if not all the investors in India, have no desire to understand things beyond literally just wherever they are playing. unfortunately or fortunately, have never thought of that and thought like that. And that's the answer to that is the way I was brought up by my father and the priest who taught us. It was a very globalized outlook from day one. And I've carried the same learnings till today. When I'm exploring new things, I'm curious about things. I want to learn more than what is already available to me. And in the investing journey, after having done India for 7-8 years, I started in 1989 in business. By 98, one had understood the existing company, Bajaj Auto, Tata Motors, Gujarat Ambuja Cement and all that. I was restless. I said, I don't look at myself now doing this for the next 30, 40, 50 years of my life. Just analyzing Reliance Industries and Ambuja and all that. It's too boring, man. Let's branch out. Let's look at some other countries. We can apply the same skills to a higher level of play. We will also upgrade ourselves accordingly. That's why in 99, we got membership of the London Stock Exchange, the first Indian firm ever. And till date, I think the only one to have got membership of the London Stock Exchange. And then we became members of the NASDAQ in 2000. That started our global journey of understanding global companies, global businesses. And that has paid huge dividends. Amazon trade or Apple trade are only byproducts of a thinking which led to that. They didn't happen out of just walking into America and going shopping online and saying, okay, great. No, there was a method to reaching that point. So the point is, to answer your question, if you're curious about knowing more things, there are enough tools to make you knowledgeable.
What are some 4 AM industries from a global perspective and from India?
So I don't look at industries, to be honest with you. I mean, I do, not to say I don't. It's good to look at it, but it's not something I pay a lot of attention to. The biggest way you can make money is to get the top-down asset allocation right. That is this year for equities? Is this year for commodities? Is this year for fixed income? When you start from there, if say equities look good globally, then you drill down to which equities, US equities, emerging market equities, Japan, something else. Then you drill down to the region. If emerging markets look good, as they were looking in 2003-04, then which countries look the best? Once you come to the country level, most of your returns have been made right at that point.
So you just buy the country indices, or you just go depth down and...
No need to go deeper down. Now, let's go to same time when emerging was doing well in 2003-04, you had commodities doing well. Almost similar to the today's situation when dollar is crashing. So money was flowing out of the US dollar into commodities, into EMs. They are like a seesaw. Now, when you are looking at commodities, let's say today, we know Oliver knows about the gold trade. I have bought gold. I exited actually yesterday. I had call options. But I exited. I was making a lot of money. So I said, let's take money off the table. But I didn't buy only gold. I bought South Africa.
Why?
Because that's the third largest gold miner in the world as a country. Now think about it. When your biggest commodity or one of the biggest commodities is doing that well, the knockoff effect on the economy and the real economy of the country is huge.
Right.
Gold goes up 20%, but the country will go up like 200% because everything changes. Right? आप गोल्ड माइन कर रहे हो, उसके चलते आपकी लोकल इकोनॉमी बेनिफिट करेगी, उससे your fiscal, your trade, prosperity, everything changes. Like I bought copper. I'm bullish on copper.
Why are you bullish on copper?
That's a larger discussion. But let's say I'm bullish on copper. Okay. But I haven't bought just copper. I've gone and bought Chile. Chile is the largest producer of copper. So if copper does well, which I believe it will, the knockoff effect again on the country's economy, which is the largest producer, is going to be massive. Everything will change. You see? And then you go back in time and check when the last time copper did well, how well did Chile do? The data is staggering. So again, this is a hypothesis, but it's grounded also in historical data. The last time copper had a bull market, Chile's economy was on a tear for several years. You see, that's how you build connections. Now the question is, you will come back, but sir, how will I learn this?
Yeah.
Start. Be curious. Never be satisfied. I have said this, written this. Indians are too self-satisfied and self-congratulatory. We are too inward focused. Bahar socho.
I'm very curious to know, why do you think copper will do well?
I mean, what piques your curiosity?
it piques my curiosity because I was just reading, sir. And I also saw one of our promoters, a very big Indian promoter, writing about copper, and he was also betting on copper. So I tried to, learn more about it. He also say,
In my opinion, in every investment theme discussion, there are enough pros and cons. It's endless discussion, which is why, frankly, I never even discuss why I like it, or why I like X or why I like Y. Because it's again, these are all probabilistic bets. It may not turn out to be okay. It's fine. But somebody listening to this, sir, you said copper is good. I bought it at 4.4, now it is 2.8. I don't want to get into that.
makes so much
discussion.
sense. Yeah. So once you come to the country level, sir,
Good enough.
if you have 100 rupees invested, how much of that is in India and how much of that is in abroad?
Now it would be, I think, not more than 5-10%.
And the rest 95%, if you have to allocate, how do you decide कि किस country में कितना हमको लगाना है?
No, so right now it's most of it is fixed income. Because I found in the last 4, 5, 6 months since I moved out of India, moved out of US also, which were the two big investments, I did not find that I can take a big bet on any other country just yet. So I bet on the Eurozone. But I did not feel comfortable betting all the money that I had exited out of these countries into another bunch of equity markets, because we knew Trump was coming. We knew his basic stand. He has done tariff war even in 2016. Let's be a little conservative. So most of it went into fixed income, but I also have countries. I've told you, I've got Chile, I've got Poland, I've got Greece, I've got Eurozone, Italy, Spain. So yeah.
And no specific stocks in this. You only buy countries.
Yeah, these are countries. You don't need to go to specific stocks.
Why?
You don't need to. Good enough.
Good enough. This is very interesting. Finding the 4 AM thing. तो इंडिया में अगर बात करते हैं तो वो लोग बोलते हैं कि you have to invest in AI, you have to invest in solar because these are all the sunrise industry. But everybody is behind that.
4 AM is not about sunrise industries. It's actually something on which the sun had set and now looks like reviving.
Help me understand this.
I don't buy futuristic industries. I have no idea what solar is going to do or what AI is going to do. I have no idea. I'm not a venture capitalist. I buy existing companies which have gone into trouble or existing countries that have gone into trouble, which had a decent past due to a variety of reasons, macro, government, individual, bad luck, anything can happen. Yeah, many things can go wrong. It has gone into trouble. So the 4 AM comes out of that it was at one point an 11 AM stock, rose up, fell, and now it is languishing. That is that. It's not a futuristic industry that can be called 4 AM. So don't confuse sunrise industry with 4 AM investing framework. That two completely different things.
And is it true that everything which was 11 PM back then will have a 4 PM movement, 4 AM movement? So if India, 4 PM country now, what will it take for us to become a 4 AM country?
A crisis. You go from 4 PM to 4 AM because of a crisis. Slow down, fiscal deficit, industrial production not good, AI. Anything can cause India's problems. So it will become, most companies, sectors will go from 4 PM, will go from 11 AM to 12 noon to 4 PM to 6 PM, eventually to 4 AM. And not all 4 AMs become 10 AM. Never forget that. It's not a necessary journey that every 4 AM will become 11 AM. No. Far from it.
So I read your article about how the demographic dividend will become a demographic debt because of the AI. And the basic thesis was कि अगर IT इंडस्ट्री में ही अगर इतने layoffs होंगे और इतनी jobs नहीं मिलेंगी लोगों को, हो ही रहा है, तो फिर बाकी के जो graduates हैं वो कहाँ जाएंगे? And every industry is getting impacted with AI.
Exactly.
And India का जो backbone है, जो वो IT industry है. And I'm constantly thinking about this, okay? And
why do you think about it?
Why do you think about this? Because you know this is happening. How do you leverage this information to do something, get into action, and either make money out of it or be stay ahead of the curve? That got me curious and that got me thinking. And I was thinking, what were some other crises that we as a world faced earlier? So for example, if you know, बहुत पहले we were having a ozone layer, ozone.
Yeah. It was thinning.
Yeah, it was thinning. And everybody was behind this, यार aerosols की वजह से, chlorofluorocarbon की वजह से this is happening. And it was a very, pessimistic view about the world. But something happened and we came out of that situation, right? अब मैं ये सोच रहा हूँ कि will something happen and we'll come out of this situation, yeah, we are going to get doomed. I'm in a dilemma. How do you get out of this dilemma?
I don't have to answer all questions in the world, no?
But if you know this,
I can have a question. I don't have to necessarily have the. In fact, I have always had, from the time I was born in this world, I've always had more questions
right?
than I have answers. So I don't have to answer the question what happens to AI and because of AI India का ये हो जाएगा वो हो जाएगा. ठीक है, देखा जाएगा ना. हर चीज का क्यों इतना भी दिमाग का दही करने का है?
I want to understand what's the deepest desire of you right now. So let's say if a genie comes to you and says, Shankar, whatever you ask shall be given. What would you ask the genie?
I want to resolve problems of the brain.
Okay. Yeah, you mentioned this before. The gift to the world that you want to give. Yeah.
I've already made a lot of progress beyond what any doctor can ever tell you or give you.
What's the product?
WIP.
Okay.
But yeah. And it's not one, there are multiple approaches. Again, we look for one perfect solution in a complicated piece of circuitry like the brain. There is no one approach that works. It's a combination of approaches. Just like in investing, no one approach is perfect. To become a complete investor, you need to have many and all the shots in the book. Because pitch conditions differ, bowlers differ, opposition differs, weather differs. So similarly for the brain, you're again a computer science engineer, you will understand that it's far more complicated than what any circuitry you can design. And therefore, no one approach will work. So it's multiple approaches to solving this problem, but it's solvable.
Have you seen your... So मैंने आपका बहुत 10 साल पहले इंटरव्यू देखा था. उसमें भी आपने ये बोला था कि look for certain things जिनका पूरा समय अभी चल रहा है and they will become, little bit good if the needle is good. Have you seen your investing philosophy change while you were at 33, 44, 40, 50?
Hugely.
Can you walk us through that process? What were you thinking?
When I was in my 20s, obviously one had no money, so one's outlooks were very short term. See, understand this, when you start with nothing, as I did and a lot of my peers also started with that in India. In India in the 80s, early 90s, there wasn't a lot of money around. So there were no really wealthy people. But we started out, and when you start out with little or no money, you're very short term in your thinking because you need to have money, right? Long-term investing is all well and fine, but it's not going to pay your bills.
True.
You buy and you hold. People say buy and hold for 20 years. Warren Buffett.
Buy कैसे करेंगे?
अरे नहीं, buy कर भी लिया तो जिएंगे कैसे?
Right.
नहीं, Warren Buffett. अरे भाई, Warren Buffett was born to rich parents in the richest country, in the richest era of that country, which is post-World War II. Don't think you are going to become that. It's not going to happen probabilistically. You have to think differently. You're born in a different... I'm talking about India of then. Maybe India of today is different. So our thinking, or my thinking, are very short term. With more wealth, you're able to take better decisions, which, let's say, longer term decisions. It's like a subsistence farmer. You are doing things to subsist, but not necessarily growing the crops, which will have payoffs while down the road. You want to do immediate, quick turnover transactions. Same is with investing. That in the initial phase, with no money, you are quicker in turning over. The stock will go up, but I need to pay my bills or buy a car to बेच दो अभी. With more wealth, your thinking changes accordingly. You're able to take better and a longer perspective. But ultimately, what has changed for me has been this realization that it is ultimately a game of probabilities. Warren Buffett has never taught us this. He's taught us many good things, but he never taught us this is only a game of probabilities. Because when you think of investing, start thinking of it like a game of probabilities, then it only demystifies the whole game of investing. But the game of investing is sold on the basis of a mystical quality in that one person who can see the future better than others, which is all bullshit. If Buffett could see the future that clearly, his strike rate would not be 5 out of 100. He's amazing. But he's amazing not because of his stock picks. I consider him amazing because of his articulation of his philosophy. That's about it. But the point is not that. The point I'm trying to make is that my biggest realization has been that it is only a game of probabilities. Now, you might think it's a very easy thing to understand, but no, it's not. When you're growing up, every decision you take is a game of with very certain outcomes and certain payoffs. Wrong ही नहीं हो सकता है इसमें. If ACC is good, Ambuja is good, Motors is good, Tata Steel is good, there is no room we leave in our minds that it may not be good. When you grow older and you grow wiser, you start to realize that no, there's no sure thing. It's only probabilistic, complete probabilistic outcomes. If you start thinking like that, it reduces pressure on your ego. The biggest problem in this whole game and in the game of life itself is your ego.
Yeah, I will be always right.
That I'm always right. Moment you start to think that statistically, the pressure is off you. ठीक है boss?
I may be wrong also.
100 decisions ले रहे हैं, 30-40 तो wrong होगा ही होगा ना. 50 होगा, by the way. I mean, most investors, Jim Simons, I think his strike rate is only 50%. Buffett's is much lower, but Jim Simons, 50%. With 50%, you can still make a lot of money. But the average guy on the street believes it's got to be 100. Otherwise, what are you doing? That's why they don't become rich. That's a real problem. Small guys don't become rich, most of them, because they believe in certain outcomes.
So now, if I understand it at a fundamental level, it's about probabilistic, it's a probabilistic game. How do I play that probabilistic game?
Large number of small bets, as opposed to small number of large bets.
Large number of small bets.
The original mantra, Holy Grail, taught to us that you have to take concentrated bets, concentrated portfolios, put all your eggs in a few baskets or only one basket and watch the basket very carefully. This is what Ben Graham said, or Buffett said, or Phil Fisher said, or Peter Lynch said, and this and that is all bullshit. Complete and total nonsense. It does not work. Again, Peter Lynch, I don't consider him to be a great fund manager by any. And I say this, and I say this with a straight face, that there are no great investors. There are only great bull markets. That's all there is to it. Buffett became great because he was in the greatest country in the world and he happened to be there in the best era.
But there were all other people also, no? During the same time, in the same place.
Correct. He's done better than them. But almost everybody born in that era did well.
But not everybody is a billionaire, right?
Well, you don't have to be a billionaire to be considered successful. I mean, if you're making 100 million, you're still very okay. That cannot be. See, you can't just say the benchmark is only X amount of money to determine. Maybe you don't want to manage public money. Many people have become wealthy not managing, but they are not never going to have the pool of capital available to you because they don't want to do it. It's okay. Point is not that. The point of whatever you started out with is your net worth substantially higher at a point out in the future. If the answer is yes, started with a crore, you made 200. Somebody started 1,000 in made 2 lakh. It doesn't matter. Is the trajectory vastly different from what the average person in that environment has been? If the answer is yes,
then you're at a rate.
Then you're doing very well. All right. The point is that for any of this to have happened, whether a Buffett or a Bill Gross in fixed income or a Peter Lynch, without a US bull market, it was not going to happen. In Japan, who is the Buffett? Nobody. China, who is the Buffett? Nobody. Europe, who is the Buffett? Nobody. Latin America, who's the Buffett? Nobody. You need a bull market to become rich.
So you can't make money in bear markets, is it?
No way, no chance.
Even by shorting.
You don't understand. Shorting is not going to make you rich. It can make you, okay, correction. You can become rich for a period of time. But structural wealth is not made out of shorting. I have been the original shorter in India. I mean, I know this game better than practically anybody else around.
Right.
Okay, when I say this, it has to have meaning. I've only shorted to save my wealth. If I made money, which I did in, I think in 2000.com, I made money. In 2008, I made a lot of money. Okay, in the GFC crash. But original intent was not to make money. It was also to protect what you have made. So a bear market strategy of shorting is, in my view, not going to make you money. It will help you save
whatever you have.
Whatever you made. And frankly, if you do that, imagine that you made 100 rupees. The whole world also made 100. Markets fell, they went down to 20. You remained at 100. Boss, you're starting the marathon at the 25th mile.
Crazy.
Everybody still is at minus 25 miles. Think about it. It's a 50 mile differential. You're going to win this game irrespective of whatever happens subsequently. If you've saved money in a bear market, if you made money, man, then you are like starting the marathon after the marathon is over. It's fantastic.
Now, since you know this, the next question would be, how do you identify a bull market? How do you identify कि यार यहाँ पर bull market आ सकता है या फिर इंडिया में यहाँ इस point पे आएगा? How do you do that?
Data है, statistics है.
What are some statistics? Because आप research की data की बहुत सारी बात करते हो सर. I really want.
Lake of returns theory.
I understand that.
That's it.
But now I want to understand what are some data points that you look at.
Lake of returns theory. It's powerful. I intuitively knew it in Harshad time in 92.
There is finite amount of returns that you can make through a asset class. Once you do that, there will be next well that you need to.
The finite amount of returns is not the long-term returns. The finite returns are 2 to 3 times that long-term returns. That's the tipping point. Markets don't fall because the lake has filled up only to the extent of 1.2 times its capacity. No. Lakes burst when they reach 2.5 times the capacity, 3 times the capacity. That's the point. This is very crucial to understand. If the long-term returns from Indian equity is 10% and they have compounded 15% in a certain period, that lake is not going to burst.
Interesting. So just a tangential thought. You also said you look data in relationships also. You said this line in one of your interviews. I could not understand this. What data do you look in relationships, sir?
Oh, everything is data, no? What else is it?
What is the
That's what I was telling this young kid who works for me, that he started dating somebody as a potential marriage. I said, make sure that you have data of 2 years minimum before you make that decision.
And what kind of data do you look at?
And by the way, I told him to maintain a checklist of pros and cons.
Okay.
Yeah. Like we do a company analysis, exactly the same framework applied to your potential partner.
What was the checklist about?
So we have a very vast set of checklists we look at when we look at a company.
Okay.
They don't all have to be checked. There's no perfect company.
Right.
There'll be a lot of imperfections. On the balance, if the risk reward based on this checklist looks good, it's fine. It's the same in the
markets also and the life also.
In the relationship also. There's not going to be any perfect wife or husband. There is no such thing. But if you evaluate it at the end of 2 years and you've done it diligently in real time, that, yeah, okay, today she said this, that is somehow discomforting. Write it down. Okay, that time I was unwell. My mother was busy going a kitty party. Father was out in business, but she left her business. She came and spent 5 days there at home. Big positive. Collect this data, collect evidence. Investing is about weight of evidence. What did I say? In the brain, you want to solve a brain problem, one approach not going to work. You need multiple approaches. Same way investing or markets, macro. It's about weight of evidence. 100% of decisions can't be made with one good favorable, tick mark. People say, "Arey, ye hai to perfect." Arey, aisa nahi hota hai, boss. That is an amateur rookie way of looking at it. Collect the weight of evidence. Their debits and their credits. As long as the credits substantially outweigh the debits, you're okay. But one big credit is not good enough. If you make money with that, then consider it to be only luck. There was no process involved there. And we get lucky by doing nothing. Hota hai. But please, for God's sake, don't start believing that was your skill that made it happen. Simple as that. So same way, in relationship, have data.
और cricket और stock market में क्या relation है sir?
बहुत relation है. It's all about strategy. It's about playing aggressively in certain situations, playing defensively in certain situations, reading the lay of the pitch. It's not a completely batsman's game unlike this. So there's a lot more skill required to be successful, because here the field placements, everything is it's a batsman's game. People are there to see the sixers, and the 200 runs in 20 overs and all that. People not there to see some team making 65 runs in 20 overs. You will not sell tickets, correct? But in test cricket, we will love a game to be like the first team gets 120, second team gets 105, second innings the guy bats, he gets 200, and then you're setting like some 220 to win fourth day, fifth day track. Low scoring game is actually considered a fantastic test game, unlike a one day for a T20 format where a low scoring game, so people will leave halfway. You see the vastly differing goals we have in the two formats. That is where the skill is involved, because in that thing you have challenged, in many ways you are challenged, the field placement. That's why Virat Kohli is a great one-day format player, but he doesn't do so well on a seaming track. Playing defensively, playing offensively, playing aggressively, just like in markets. Pitch is difficult. Most people have only one play. Go out batting aggressively. That's a one-way ticket to going bust. Even within the same day, your play will be different. Pre-lunch pitch was different. Lunch to tea, the pitch was different. Tea to end of play, the pitch was different. Or the opposition was different. The bowling was different. The conditions were different. Everything is different. Markets are like that. Markets are not a flat pitch permanently. Or nor are they difficult pitch permanently. So, and again, to succeed in the longer format, you need a very complete level of play. You need to be able to play spin, pace, different conditions, seaming track, swinging track, bouncing track, dust bowls. As a bowler, you need to have different skill. Old ball, new ball. Isme kya old ball, kya new ball? 20 over mein to sab finished.
Who are some investors that you respect a lot?
George Soros, I think, the only one that I really respect.
Why do you like George Soros?
He thinks, or I think like him, or I have thought like him. Super flexible, willing to change your mind, not having fixed frameworks, ability to short markets, ability to exit quickly, pivot, being a hare, not being a bull or a bear. I'm a hare. I think George Soros, the way I have understood him.
Have you met George Soros?
Yeah.
What was the interaction like?
Very good.
How did you end up meeting him?
No, we were dealing with Soros funds. They were a client of ours on the brokerage side.
Very interesting. And what did you learn from meeting him?
No, actually, I told him that his trade is wrong. 2008. He was long oil and long emerging markets and short US. And I told him this trade has to be exactly the opposite trade. You have to be short EM, short oil, and long US. If you need a hedge, actually short everything, but if you need to balance it out. Oil was $130 then. And I told him, in my view, it goes to $30. Go back and check in July what the price was. And Brazil was still very strong because, again, oil dominated. EMs were doing very well. The theory back then, we forget, was that emerging markets have decoupled from the US. That was the common lore. And I said, there's nothing like that. EMs are going to go down the tube. A month later, he changed his view. You see, now that's, in my view, the sign of a great investor you don't have to change your view on everybody who says something. But if the opinion coming through is logical, reasonable, and of course, there's a longer discussion, if it looks cogent, I'm prepared to change my mind. That, for me, is investing greatness.
Were there times when other investors changed your thinking?
So, it didn't work out for me, unfortunately, but I remember 2009, I got the 2008 short trade very well. I played it fantastically.
Played it in 2007, if I'm not wrong.
Yeah, late 2007, December onward, I was very negative. Markets started to fall in the first week of January of 2008. I shorted, remained short throughout 2008, remained short for the first quarter of 2009. And I was looking at trying to exit my shorts. I'd already made a lot of money. Those kinds of years don't come. And then, a very good friend of mine, again, prominent investor, called me and said that we're having a drink or dinner at Jewel of India. So I said, yeah, great. I'll come. And so I went in thinking I was going to be, I didn't want to discuss, I don't like to discuss my trades or anything, as you should not ever. But when you're sitting in a group of very intelligent people, they're all very old friends of mine, very prominent investors, everybody knows about them. And then the talk was that markets will go down even more from here. It just gotten started. Markets are already down 60% by then. It changed my thinking. I'd gone in thinking I'm going to cut my shorts, made enough money, and markets are due to rally. Whether they go into bull territory or not, but at least good enough to cut your shorts. But that meeting changed my mind.
But it didn't work.
Exactly. And I lost money because of that dinner meeting. And not their fault, it's everybody's view, and we're all adults. Nobody sensible should ever blame anybody that, okay, you told me and I lost money. This is the way the small investor will always say, I heard you. That's why I said copper I will not discuss. It might go to $2, who knows? Okay, but as professionals, we are big boys. We have taken our, hurts. But that also is a lesson that best investing works sitting in a closed room and only with data. Don't go out discussing markets and themes and what looks good, what looks bad. No, don't do that.
But then how will you?
This is a game of being a hermit.
But how will you challenge your thinking? Because when you think about something, there might be some lacunas in your thinking, and if you discuss that with smarter people, you get a reflection of or the direction of.
You see, that's the whole point. I agree with you. And ideally, it should be that. But in most cases, everybody will be talking about their own, let's say, I would call it biases or preferences. They may not be right. But when I am discussing and challenging my own, and I do believe I'm very neutral in my thinking, even with myself. So if by nature you're very critical, and most importantly, self-critical, you don't need other people to criticize or critique your view. You don't need it. You can do it yourself. Try to be as self-contained as possible. You should be like a monk. You're in a meditative state. Monk is not running around looking for opinions. You've gone into a zone, you've gone into a state of Zen, where all the goods and the bads are circling around your head. You should be able to see all the galaxy, rather than looking, okay, yaar, tum batao kya lagta hai, tum batao kya lagta hai. Sabka apna views hai, biases hai. And by the way, if you believe it will influence your view, no doubt about it. Who will you ultimately hold accountable for that?
You can't hold someone else.
Correct. But I want to be accountable for my wins and my losses. I want to be 100% accountable for it. I don't want ever to credit anybody with my profit or debit anybody for my losses.
And so, thoda sa isko interesting kar de. Let's come out of the investing thing. A couple of things that I always wanted to ask you. Tell me some of the best experiences that you have had in life.
It's not one experience, but like a journey. And like for me, cricket was a big game-changing journey of my life, because before I started playing cricket, which was in class 7th, I was leading a very, let's say, a privileged life. My father was a good officer, big homes, cars, air-conditioned rooms, we're talking 60s and 70s. Very privileged life. And I knew it was privileged life. Again, I'm very critical. I knew कि यार ऐसा देश में तो ऐसा होता नहीं है. I'm very lucky to be enjoying this life.
One of the most interesting pattern about anything in the world that you have recently figured out and that shocked you in life.
There is somebody who suffered a brain injury. This was like 1.5 years back. And I spoke to a few doctors, medical doctors in neurology as well as neuroscientists. And I said, how do you train this person to be able to get the use of the limb back? Okay? Because the motor cortex, which controls, all the brain is frankly is a little bit more complicated, but historical delineations exist that this part handles this and this part handles this. Occipital lobe handles vision, motor cortex handles this.
Frontal lobe does this.
Frontal lobe this, and whatever. Cerebellum for your balance and a little brain. Anyway, but actually in reality, it's not so watertight. Incremental science has proven it's more complicated circuitry. Assume for a minute the motor cortex is damaged, and hence because of that you can't use your hands or something. So I asked the doctor, how do you give use of the hand back to this person? And they didn't have any answers. They said, do physiotherapy. Okay? So, which is the common thing. If ever anybody has a stroke, that's what is the PT physiotherapy. That's pretty much where the medical science ends. I said, that's not a good enough answer, boss. That's not a good enough answers. Then I started to research that what is the movement? So movement is something which is triggered by your entire neuronal chains, the synapses, and they travel down and say, okay, chalo, clench your hand. What if we work in the opposite direction? That we clench the hand of this person, can it reflexively go back up the channel and excite that part of the brain which has been damaged, or let's say whatever, some degree of problem there? Can we do it the opposite way? Doctor said, maybe. I mean, that's what physiotherapy broadly seeks to do, but I mean, who the hell knows what happens? But I said, but I don't think physiotherapy works, which actually it does not in most cases. Then I said, okay, so why doesn't it work? I'm always asking why, boss. So, क्यों नहीं काम करता है? Again, nobody knows the answer. So again, I kept thinking and researching, read some papers, this, that, jo bhi hai. There's nothing, there's no answer there. I said, okay, let's do this. Let's do a hypothesis. So I got a robotic arm and I put it on the person. The robotic arm's function was only this. It will just robotically clench and unclench the fist for hours in a day. Now, otherwise you cannot do this. No physiotherapist is going to work 10 hours a day, but a robotic arm can work. Correct? $500 में मिलता है चाइना में. Simple. ले आया, लगा दिया. That person in 9 months is able to clench and unclench the fist. When I said this to a doctor, he said, that's unbelievable. How has it happened? I said, my hypothesis, again, we will do more complicated brain imaging, but actually even that doesn't show everything. I know a lot about neuroscience, so many things are not even apparent on MRI or even on a PET scan or a, SPECT. But maybe what has happened is my theory has worked, that reflexively it has helped that part recover by a forced use of that part. So instead of it traveling this way, I have made the signal travel back up this way. अब उतना demand जा रहा है उधर में, तो कुछ तो पहुंच गया, and it has re-engineered that and rewired that part of the brain. Which is why on command, the person is now clenching, unclenching, which was the original goal in the first place. You see?
Yeah.
Now, there is no such thing known in medical science.
Does this incident led you to, double down and...
No. I am curious about this for years.
Very interesting.
But I have done this is only one example. I have many other.
Give me one more example in which you learnt about the world, which shocked you, or which gave you a feeling, okay, this is very unique. What shocked your curiosity lately about the world, about anything in life?
Again, comes down to science. Yeah. Do you want an emotional answer or scientific answer?
Both.
I don't think of, okay, so emotional answer, you can think that relationships, for them to last. Okay? Any kind of relationship. Friends, spouse, parents, brother, sister. Any relationship, for it to be durable and lasting, this is my realization now, should actually be intermittent.
What I understand from this is you need to give break.
Everything should be intermittent.
Translate this to...
The continuity of anything is damaging to the very existence of that thing.
And what do you mean by intermittent thing in relationship? You mean like if you're staying together, you have to just go away?
Give it time. Have it intermittent. If you're going to hang out with a friend, live with your parents, live permanently with your spouse or your girlfriend, you're going to run into problems. But if you make it intermittent, why is intermittent fasting so important or so valuable? Because it's intermittent. If you fast big time, it won't have the same effect. Why is interval training so valuable? It is intermittent. If you run steady state, the effect on the body is far, far less powerful as compared to the volatility of the intermittence. So the trick is, the more intermittent anything that you do, the more powerful the regenerative processes that emerge out of that ups and downs or the volatility of that relationship. Whether it is fitness, whether it is relationships, whether it is diet, whether it's nutrition. So being intermittent in all of this. We are told, and we're not even told, we just assume that continuity is what is good. But actually volatility is better. Intermittence is volatility.
What do you think the future will look like 20 years down the lane? Or when your daughter would be your age, how the future would be?
For one, I'm not a big long-range thinker, to be honest with you. So I don't even like to think like that. I'm a one-year-out thinker.
What do you think will happen 1 year down the lane?
1 year down the road, I mean, if you ask, like, obviously this is a question or discussion around investing and macro and all that.
But I'm not constrained about the investing thing. I'm constrained about the world that you live in, sir, that we live in, sir. What do you think what will happen 1 year down the lane?
Completely, the whole order is being upended, and it will be even more upended 1 year from now. You will become a unipolar world, more centered towards China than towards America. That's very clear and present.
So if I know this, and I want to use this piece of hypothesis to act in a way that it makes money for me,
Yeah, I'm already acting on it.
what do you do that?
I'm already acting on it.
But as an investor, I can't go and invest in China, no. How should I invest as a retail investor? If I understand this geopolitics, how shall I make money? Because China के साथ में तो कोई data ही नहीं आता, कुछ पता ही नहीं चलता. And it's so, just like Chinese government can break down anything. They've done with the education industry, they've done with a couple of other industries. So how do you go and invest in China? How do you? And how
Don't
can
ask me a question that is coming out of your problem.
Okay.
I am not here to solve your problem.
Okay.
You have a problem. I agree. Solve it.
How have you solved that problem?
I solved it.
How?
In 98, 99, decided to globalize. That's it.
But how do you understand China?
You understand. You find links. You know people. You know economists. You get data. Then sab milta hai, boss. From the more internal things. But again, who does that? That comes out of your boss. We are products of our own desires. You want to eat vada pav, you will find a vada pav in Sahara Desert to go and eat in.
Makes sense.
Yeah. Are you curious enough to get vada pav in Sahara Desert?
That's why I'm asking you.
Correct. So if you want to understand China, I want to understand China. We will find people who will make us understand China.
Are there any economists or people in India that understand China well?
I don't think so.
You like Nehru?
If you don't like Nehru, then I don't think you should have. You should be proud of anything that India has achieved.
Because I was just looking and I was saying, Nehru did this, Nehru did this. This is only because of Nehru. So I was like, you're a Nehru.
Not only because of Nehru, but the best period of our scientific innovation
Happened because
of him. Then that is the data. That is a fact. There is nothing debatable about it. He had the vision to create your institute. He had the vision to create many others. Because of that, we achieved a level of status which I don't think any other third world country achieved.
Tell me, what is one thing that you're trying to teach your daughter?
Not one thing, there are millions of things to teach. But I mean, it's not about my daughter alone. It's anybody who cares to ask me. There are a lot of things one can discuss. And not just teaching is too, arrogant a term. It's more about...
What do you want her to learn from you?
I don't have to learn. She doesn't have to learn anything. She knows it all. I learned from her.
What is one thing that you've learned from her?
Steel, her athletic abilities, her determination. She's far more determined than I am. I mean, so it's not that a kid has to only learn from the senior.
Thank you so much. Really grateful, sir.
Thank you very much. Thank you. All the best, Shivank. Thank you.